Let me record this. All right, we are recording. So guys, I want to share, and I asked Jackie if I could share her story on here tonight so you guys could really understand, okay? Because Mrs. Jackie Bashford went to a Jackson and Hewitt to get her taxes done. She messaged me. She was freaking out because she was owing the IRS $8,200, okay?
What happened?
I sent her to John, and John fixed her taxes, I believe this year and last year, if I'm correct, and actually got her money back. So not only did she not owe, but now she's getting money back, right? And the thing is, I'm not bashing Jackson and Hewitt in these chains at all. And if you have W-2s, okay, no big deal. But you're in business, right? And so, guys, make sure when you're jumping on that you mute your lines, okay? And so you want to make sure that when you're doing a business, you're going to someone that knows their stuff. Let me tell you, I did taxes, right? That's how I met John. You take a 6-week course, you pass a test, boom, you're doing taxes. I'm going to tell you right now, I can't even do my own taxes, okay? But I was doing other people's taxes. So you just need to be very careful and not be, trying to take those shortcuts or those corners in your business. I will tell you this, guys, and I'm not getting paid for any of this at all. I'm doing this because I really need you guys to understand and be educated, because I don't want you to be crying like I was. I don't want you to be crying like Jackie was, right? But John, can help each and every one of you. And his services are usually cheaper than what Jackson and Hewitt and all these companies will charge, because he's a small business, right? I remember when I was going to Liberty Tax, I was paying, I don't know, $800 plus for my tax return, right? So don't think that you're taking these shortcuts, because in the long run, these shortcuts can actually hurt you even more, right? Just like I said, Jackie Bashford, she went to Jackson Hewitt. They're trying to tell her she owed $8,200. The problem is the tax preparer did not evidently know all the tax deductions or put something in the wrong line. I don't know what it ended up being, but all I know is that John definitely saved the day for her. And he can work. Well, he can help any of you. If I'm wrong, John, you can correct me, but he can work with anyone. So no matter that he's here in Bradenton, Florida, if you're in Illinois, as Don is, he can help you. If you're in Tennessee, like Jessica is, he can help you. If you're in Texas, like Francis is, he can help you. And I'm telling you, he is going to get your taxes right and even get you set up for success in your business. That's one thing he helped me with doing an S Corp instead of the LLC, right? And payrolling myself out, which has helped tremendously with my tax deductions. And once you guys start making that, that income that you're working hard to, that is something that you're definitely going to want to do. And that's something that John is definitely going to be able to help you do. Okay. So guys, listen, I'm going to go. Oh, you know what? Real quick though, guys, let me just do the recognition real quick, and then we'll get into the training. Okay. Listen, there is a tracker. Okay. Nikki Ringer put it together. It's perfect, right? She's Miss Organization. Okay. But I need you guys to have this tracker, because every first Monday of the month, we will be recognizing for the prior month, right? So today's March 2nd. So obviously February has ended. And guess what? Only 3 people turned in their recognition forms, right? So I don't have a clue what you did, and I can't celebrate you, right? And if y'all know me, I love celebrating everybody's success. But if I don't know what you did, I can't celebrate it, okay? So make sure that you turn this stuff in. So these 3 people that sent their stuff in are going to be getting a package from me, okay? First, we got, hold on, sorry guys, wrong screen. All right, so we have Jennifer Held, okay? She, hold on, let me read this right. She got 44 orders for the month. okay, which is huge, right? I know all y'all on mute, but let's see some hand claps, okay? We're going to be celebrating people here because when you celebrate other people, you are going to be closer to your success, okay? So she got 44 orders. She enrolled a new life changer. She hit G5 4 times, and she is a 250 Club member. For those of you that may be new, don't know what it is, what that is that she consistently, every single pay week, hit 250 US dollars. And I say US dollars because I know we got the Caribbean team on here as well too, right? They're making 250 US dollars in retail only, okay? Plus the other ways. And that's just minimum. But of course, they're making more money than that. This is why they need Mr. John Berkey, okay? And then we got Nicole Ringer, okay? She's 120 qualified. She's also 250 Club qualified, right? She's also attended the trainings. I forgot about that section as well too, right? Because this is it's not just what you're doing, but it's also recognizing the activity that you're doing in your business, okay? But she got 149 orders in 1 month, okay? Which is huge, okay? That is absolutely amazing. Congrats to you, Nikki. I don't know how you do it, okay? But keep on keeping on because that is absolutely amazing, as well as she has enrolled 4 new life changers as well, too. And then she got G5, I think 7 times. You can correct me in the chat if I'm wrong. I don't have my glasses on right now, so I'm struggling seeing the small print, okay? But of course, with 149 orders, she's definitely in the 250 Club. She's actually in the Comma Club every single week making that money, right? So she definitely reached our platinum level in Star Seller and then our silver level in the Life Changer Builder, okay? And then also, I believe Jennifer Held hit the platinum as well too. I'm going through my notes here, guys, so give me a second. All right, and then we have Tanya Munden. Girl, if I'm pronouncing your last name wrong, I'm so sorry, right? But she had a goal, and that's the thing too. On the sheet, it's goals, right? We have to write down our goals every single week. Okay. Her goal was to reach silver. Okay, and she did. She enrolled 3 new life changers. And I seen that, Tanya. I was like, go, Tanya. And then she also got 24 orders. So she reached gold level in orders. So she actually surpassed her goal. So it's the power in writing these goals down with that date, right? Because if you don't, it's just a dream. Right? So make sure that we are doing this stuff. We're writing our goals down. We're putting a date on it. We're keeping it in front of us and we're working to get those goals and even surpass those goals, right? She hit G5 twice and she is also 120 qualified as well too. It looks like she even did 5 home parties. So congrats, guys. I love it. Sorry, I've been so busy all day. I just had the screenshot, so I couldn't actually write it all down, so it was a little bit more organized. But congrats to those that turn in their recognition sheet. Guys, turn them in, okay? At the end of the month, right? I don't know, is it 30 days or 31 days in March? I can't think right now, right? At the end of that last day, send that sheet in. So that way, that following Monday, we have your sheet and we can go ahead and celebrate you. So guys, listen, I'm going to move out of the way and I am going to bring up John. So guys, he can really go ahead and just share with you about setting your business up for success, taxes. I even have his business card here. I know y'all seen me post about it, right? Because I'm like, look, y'all better go to him so he can save the day for you. So guys, listen, I'm going to go ahead and give it over to John. John, are you there and can you hear me?
I can hear you. Can everybody hear me?
Yeah. Oh, my volume's down. Yes, I can hear you.
Okay, that's all. I want to make sure everything's there, but that's a hell of an introduction, so thank you. Not sure I can give up that kind of energy, but good. But I am glad to help out everybody. You guys have an incredible opportunity. When Kiwi first brought back her first 1099 for me to look at with Total Life Changes, I was kind of blown away because I was actually a firm believer that there wasn't that much opportunity in MLMs by the time it was over. But it's been an incredible situation for it. But it has come up over the couple of years that as other clients come on, it's important to know the structure of the business before you even get into it, as to what your goals are, and then what structure you should be putting around the business up front, whether it be staying as a sole proprietor, which is usually a good idea up to the first 40,000 in revenue, and then sitting down with somebody to figure out whether an LLC or an S corp is the best situation for you. And it's different for everybody. In many cases, especially if somebody's got small children at home and it is the primary source of income, remaining an LLC gives them a little bit more flexibility and gives them the ability sometimes to still qualify for some of the earned income credits. Once you get beyond the $80,000 range, that's kind of out of the window to begin with. So it becomes very advantageous to actually look at the idea of an S corp. And the reason being is an S corp, you don't have to pay self-employment tax, or what is known as FICA. So it's a lot cheaper for you in the tax structure going forward after about that $80,000 range. So that's one of the reasons it's always a key idea to sit down with somebody that's knowledgeable, look at what your goals are, look at what you've been doing, and then try to structure a strategy for what the corporation should look like or what the business should look like at this point, and when do you take these next steps. The other part to know that when it comes to knowing some of the deductions is knowing that once you make a commitment to a certain business structure, how to run that business through that structure. For example, if you are an S corp and you want to be able to write off auto expenses while you're driving around, you either have to write a check from the business to you as a personal, or the business has to own the vehicle. So that's one of the things that knowing up front, how you have to put all the assets as well titled in the business in order to make sure you get the maximum benefit. So with that, I'll take a pause right now because I know I've said quite a bit, a few seconds, but is there anything in particular that anybody has questions on, or anything, Kiwi, that you want me to highlight real heavily right now?
So when you said 80,000, so you're saying when they get to that income level annually, they should do an S,
yes,
right?
Yes. And once you make a commitment to that, the initiative's on you to keep going, because obviously, everybody wants to grow year after year. Mm-hmm. But that 80,000 will net normally through TLC's strategy. That's going to be net after expenses somewhere around the $30,000 range, about $32,000 roughly. So, that's a point where you're starting to look like realizing that you're out of any of the earned income credits, any of the other structures out there. So you really want to take a look at maximizing your tax benefits by minimizing the actual tax that's being charged to you. That's why the S corp becomes that key moment.
Yes, I love my S corp.
I know you do. I know you do.
And I'll never forget when I came with that 1099, and you're like, "Wow, you really changed my mind about this stuff."
Yeah, I'll be honest with you, because the first, while Kiwi was working with me at the tax office and talking about it, I thought this is insane. But most of the people I know will go into some kind of network marketing like this, and they have energy for about a month. Then all of a sudden they lose the energy, and it never goes anywhere. One thing I have to applaud Kiwi and so far all the other teammates that I have personally met is that you guys really do take the dynamic steps to keep going. Part of that is the vision boards. Part of that's the goal setting. But I always put it to something simpler as you're actually just doing some actual planning with action steps and making yourself committed to doing that and holding yourselves accountable. So high successes to everybody on that.
Yes. There are several teammates that definitely smartened up and went to John to get their taxes done. I know Ann was very pleased when she was just there because we actually had lunch after she left your office. Now, with the S corp, that's something that you obviously can set that up for them as well too. Now, let me just make sure I'm correct. The difference between an LLC and an S corp is an LLC is just protecting your assets. It really doesn't have a tax break benefit, correct?
Yeah, that's in the simplest forms. There's no real additional tax break benefit. What it means is, because in both of them, the actual profits of the business pass through to the business owner. But with an S corp, you have some areas that you can tuck it away, and it has less tax consequence. Because on an LLC, if you passes through the owner, that becomes, in the eyes of the IRS, what they call a disregarded entity, which basically means it goes back to being a sole proprietorship. So they want you to pay your own Social Security tax, which is also called self-employment tax or FICA tax. So that's roughly about 13% additional income tax that you end up paying that year as a result.
Okay. And I think there's a question in the chat here. So someone asked, so if it's less than 80,000, should they have an LLC or should they move on to the S corp, or should they just wait till they get to 80,000 to move to the S corp?
That 80,000, don't take that as an absolute concrete. It's a rule of thumb. What I would suggest in each situation is, if you're unsure what to do, reach out and we'll talk, because for each person it's different. You know, again, if it's a situation where I know that there's young kids in the home and there might be fluctuations in the income and there is no other source of income in the household, I may tell them to go ahead and stay with the LLC because it allows them some other features later on it. But to say that there's one size fits all for everybody, I'll never do that. I really want to sit down and evaluate what their situation is and then give them the best advice possible from there. Now, that said, also to look at what the habits of that individual are. Meaning that if you're going to an S corp, one of the key requirements that the IRS requires on an S corp is that the owner of the business pay themselves a reasonable salary. Nobody can define exactly what reasonable is, but the point is they are looking for you to pay yourself a payroll throughout the year and actually use the payroll service where you're paying part of that FICA tax and your federal income tax to them ahead of time. So, that's one of those things that sometimes the cost analysis might say, okay, it's better to just stay as an LLC right where you're at, or even a sole proprietor. But each of those conversations, almost everybody that's in your team that I've talked to privately will come back with a different thing what I've actually told them how to structure their business. And the reason being is it's based on what their individual needs were and not just a one size fits all.
Okay. That definitely makes a lot of sense, because me, obviously, with 3 kids would be different than someone that's maybe single with no kids, where I'm married, so yeah, so I definitely get that it's a case by case basis there. I know we got some questions popping up in here, so I'm going to read them real quick. Don would like to know, if you work full time, do you add the 2 together annually to determine if you should file as an LLC or an S corp, or should it just, when you're looking at this, is it just looking at the business side and not their jobs? Because some still work a full-time job but also do TLC.
It's a great question. To me personally, I would probably just look at the business itself and what they're looking at, but that doesn't mean I would totally exclude the other onside of the income. That'd be a one-off conversation again, trying to see what kind of withholdings being done at the primary job or the traditional job, what that outcome's going to look like long term, and then kind of balance the conversation around that piece. And even then, I probably would start looking at saying what business structure gives us the most flexibility to change should the things start improving. So we probably would start slowly and then build from there.
All right. Perfect. That's what I thought as well too. I'm trying to catch up to everybody's typing in here. I got my eyes going crazy. Hold on, y'all. I see y'all questions coming in. Well, Lisa says, if I have a full-time job and TLC second job, no kids. So basically it's case by case basis again. Now, do you offer any kind of consultation when it comes to, I guess, like getting them set up? Do you know what I mean? Like offer, like talk to them and
yeah. If I think what you're asking, will I offer a conversation around it? Yes, that's okay. Not a problem. Those are where we could talk over and figure out some one-off questions that would help me dial in what's important for the individual.
Yes. Okay. Perfect. All right. Yes, if you're married jointly is always better, I think. Don't you recommend that compared to
Yep,
separate?
absolutely. If you're married, I can think of very, very few circumstances where the advantage is into your to take the married filing jointly. Um, because married filing separately, well, the first thing that happens there is if one spouse itemizes, the other spouse automatically has to itemize, so they lose that option. And usually with that structure alone, the IRS normally gives you a standard deduction of 12,200. But if one spouse changes the rules, both are bound by the same rules. So that rarely makes sense. If there's a situation where one spouse has debts, and that's why they want to file separately, there are scenarios called injured spouse claims and stuff where you can still file separately and just separate the debts between it. There's different solutions. So to lose the benefits of what the married filing jointly brings you, to me, makes very little sense. The only time I really recommend that is if it's somebody that clearly is trying to set up a clearer separation because they realize the marriage is coming to an end. They're just trying to make sure they delineate. But even then, I will try to encourage them to look at solutions that the IRS already has as workarounds for any of the other issues, just so they keep their maximum credits.
Okay. Yes, yes. Now, Kelly asked, and I think I can answer this one actually. So Kelly asked, guys, just for those of you that don't see the chat, she asked if I form an LLC, do I have to change anything at TLC so it would register in the LLC name? Yes, you would. For instance, my S Corp is New You Reflections. So Total Life Changes doesn't pay Keely Taylor. They pay New You Reflections. And then I have payroll set up. So now New You Reflections pays Keely Taylor, right? And I'm going to tell you, you're going to want to do that when you're making that, over $80,000. Because guys that listen, if I didn't have that, I'd probably be owing the IRS, right, John? If I didn't myself.
Absolutely.
Yeah.
Absolutely. Not only do you want the 1099 to come in the name of the business, but you want to make sure that the EIN number for that business is also where it's being paid and taxed out to. And this was not one TLC, but I just seen one recently that I'm even stumped on how to help the client. But it was a situation where a bookkeeper somehow got the credit card payments to go into the bookkeeper's name and their EIN. So the guy who actually owes or got the money isn't being taxed, but the bookkeeper is. And it's an interesting scenario. So it's important that they all read it properly, because that one's going to it's going to end up costing my client as well as the bookkeeper probably thousands of dollars trying to fix it with the IRS, just because somebody made a typographical error. It's not going to be a simple fix. So you want to make sure that what happens is that TLC knows that this is the tax ID number of the business, this is the name of the business, and it's distributing there. Because that is actually what whoever that's going to is the one that's technically responsible for the taxes on.
Mm-hmm.
So you want to make sure it's all correctly structured.
Yes. Yeah. So you definitely want to update any of that information with TLC when you do it. And like, we're talking LLCs and S Corps. Remember, John can do all the paperwork to get all that set up, so it's set up correctly. Okay. Let me see here. All right. When just starting, what things should you do to set up for doing taxes, and what things can be written off?
Okay. Well, essentially the good news is when you're a small business, much of what you do can be written off. Any supplies, any inventory, and that's key, by the way, on the inventory, especially in the nature of the business you guys are, because you give a lot of promotional stuff away as well as keep stock in the house. But make sure that beginning of the year and at the end of the year, you know how much supplies you have in the house as far as TLC products and what the actual cost of those products are, as well as keep track of any purchases that you made for promotional use, or to hand out to people, or for your personal consumption, because that actually comes out of the cost of goods sold piece. The rest of it is actually as delivered out can be hand calculated to see that normally about 60 cents out of every dollar is going towards product with TLC. So it can be determined out there. But the other things you want to look at are, again, if you're driving to and from to the events, mileage. If you're traveling, you want to look at the travel expenses. You can write off the meals as you're traveling, up to 50 cents out of the dollar for each meal. So get the total receipts out of the meal and take it out there. Office supplies, postage is a big one with you guys. Internet, phone, because believe it or not, you can write off the phone because most of your activities there, even some computer, and you can even write off a portion of your home where you're residing at, because most of this is as a home office. So that can, one of the nice things is the IRS will give you up to a $1,500 exclusion right up there anyhow, based on what they call a safe haven of the home office. So there's a lot of different options and flexibilities that you can do out there. Now, one thing that they are starting to break down on, though, is if you are taking people out to a promotional event or meals, make sure it's new clients, that you're not trying to reward each other on it, because that is starting to become excluded from the IRS as being a legitimate expense. So again, if you're taking somebody out or you're taking a group out, make sure you record everybody that's there and make sure that at least 1 to 2 new clients are included so that it qualifies as a true promotional event in the eyes of the IRS. But I'm trying to think what else you can write off. You can even get credit depending on how you get your health insurance and where you get your health insurance through. You can get some credits for purchasing health insurance through the business. So there's a myriad of things that can be written off. What I always suggest is to everybody is to just go ahead and record it out there. Then we'll talk about it at the tail end of the year. And some of it, you know, I might even tell you, okay, that one's not worth writing off, or you're going to get in a worse situation. There are situations, believe it or not, where people write off so much that they actually lose some of the other credits that's out there. So we would sit there and negotiate, because the IRS doesn't require you to record every expense. They only want you to record legitimate expenses that you felt were with the business. So sometimes it's an unusual conversation to tell a client that, you know, I'm going to recommend you not write this off because it actually puts you in a better financial position, and you just go ahead and eat that out of your pocket. The one thing that I do see a lot with a lot of the small businesses where there's entertainment activities like you guys get together for your rallies and stuff is clothing. That is not able to be written off unless it's got the company and logo on the clothing. IRS they just have really buckled down on that one. To give you an example, and it's one I used recently with a client, explaining that for years as I worked, I had to always wear suit and tie. I live in Florida, where it's hotter than hell 24 hours a day, 7 days a week, 365 days a year. I wanted to write off some of the suits one time, and the IRS turned it off because of the fact that in their minds, I could wear the suit anywhere, anytime. Maybe so, but you know, I had to try to explain to the agent, we live in an environment where as soon as everybody gets off of work, they go to shorts, t-shirts, and flip-flops, and flip-flops are just acceptable in church as they are anywhere else down here. There's no way I'm wearing a suit on a Sunday or any other day except for a work day, and it still wouldn't fly because they felt that's something I could have been wearing out to either go to a wedding, go to a funeral, go out to a fancy dinner, whatever the case. So, you know, the only thing I can recommend is if you're going to try to write off clothing, you guys have a whole bunch of different shirts and stuff, purchase it through that way. And that way you can write it off.
Yes. Yeah. So like if we get something like this, can you write this off because it's got the logo on it?
I have no idea what you're looking at, Q.
Can you see my shirt?
I'm sure every time I see you, you got a logo on your shirt. So yeah, I think I'm safe to say that probably got a logo on there.
Okay. All right. But just like if we're buying a cute dress for the event or anything like that, you know, we can't write it off. I will say, as you know, Shelly, who works in the IRS, you know, my friend who's an auditor, she had a model that was trying to write off all the clothing. Granted, yes, she used it for modeling, but at the end of the day, like you said, she could wear it anywhere, whether she was going to a wedding, a funeral, a nice dinner, you know, it didn't matter because it wasn't strictly just for work. Now, what I will say that I love about John, guys, is that he's very by the book. He doesn't, you know, he's not going to tell you to write off all this and that. He doesn't want you red flagged by the IRS, right? So if he doesn't think it's something good for you to do, he's going to be upfront with you about it. There are people out there, I promise you, they will tell you to write off everything and anything you possibly can. And what that does is that sends an invitation to the IRS saying, here, come to my house for lunch, please, right? So we definitely don't want to do that, right? So he definitely, you know, keeps you in the right track when it comes to writing those deductions off where you're not going to get red flagged. I will say, cost of goods sold is a big one. Okay. That's where I get a lot of my, this year was a little less, but that's where I get a lot of my tax deductions as well too. And I will tell you that postage and that mileage will add up, right? I use Mile IQ, guys. It's an app. I can send you the link. It's the best thing. It's $60 for the year, but guess what? That $60 is a write-off too because it's a business expense, but it tracks every single drive. You just log if it's personal, business. It runs you a report every month. It runs you a year report. Boom, done. You don't have to worry about, you know, logging on a spreadsheet or a notebook or anything like that and potentially losing that, right? Because that stuff will add up. Now, John, I just want to ask what your thoughts are on this. For those that are just a 1099, right, to their name, to their social security number, don't have an LLC, don't have an S corp, would you? Because I mean, I know they're, you know, the IRS has gotten so strict on the Schedule C's with all the fraud out there. So I would think that if they have an LLC or an S corp, that they have a better chance with the tax deductions not getting, I guess, red flagged by the IRS rather than just having that 1099.
In theory, the IRS likes it because there's an EIN number that's attached to an LLC or an S corp. But the fact that the 1099 exists helps them have a certain amount of comfort to begin with, because the Schedule Cs that they're really worried about are somebody that's just landscaping on the side, you know, doing a little side hustle and picking up a few dollars, and there is no legitimate business. But I agree that the more structure where they can realize, for example, here in Florida, we have a website called sunbiz.org. And all the LLCs and S corps that are registered in the state of Florida have to go through this sunbiz.org. So the IRS loves the fact that they can just go to a website, toggle in this person's name, and they can verify this is a legitimate business. And that's where the S corp and the LLC helps. So that, yes, it's less likely to get red flagged for an audit. And it also helps them understand true structure, what's going on. You know, meaning whether or not there's more than one owner in this business, whether it's just a single individual, whatever the case may be. Whereas when it's a sole proprietor, the IRS allows it, but it's done with a lot more scrutiny and with a lot more question because they don't know exactly what's going on. And so it's one that they're looking a little deeper on a traditional sense, to your point, Keely.
Okay, that makes sense. I mean, I remember doing those Schedule Cs with someone coming in telling me they were cleaning houses or whatnot. So, but yeah, that makes sense because we actually have legit paperwork, you know, with the 1099 on there. Now, there's a question that someone's asking if they didn't file their 1099. Tasha, are you meaning for 2019? Because she said if she didn't file her 1099 this year, is it okay to wait to do it next year?
No.
Okay.
But emphatically, no. The year is tied to, there's a reason that the year is on the form as to it's tied to. Even if you go back and do it, you're actually setting yourself up for penalties if you continue to wait out longer. Plus, you're getting to where it's more difficult for you to justify any of the expenses. You know, it's, for example, if somebody comes into me and they haven't filed business returns in 2 to 3 years, it's very difficult for them to have any confidence, and it absolutely is difficult for myself or the IRS to have any confidence of where those expenses legitimately came from and whether we could ever document them if it ever came into question. So it is imperative that you do it each year as the time comes on. If it's something that wasn't done in 2018 and should have, call me sometime later this week or early next week. Let's get it in and get it done before the 15th of March, preferably, because if it is an S corp, for example, that's one of the things to know too is certain structures have different timelines. S corps have to be in by March 15th. LLCs don't have to be in until April 15th. Or do sole proprietorships, but regardless, on those that are kind of on that balance of how they're structured, I always try to say get it in before the 15th of March. That way, if the IRS does ever come back and says they should have been by this time, we can say, hey, we were in there. It may have just been in the wrong structure. We'll correct the structure. But back to the original question, if the 1099's out there, let's get it recorded as quickly as possible for the happiness of the IRS.
Yes. Yes. Yeah, I'm glad you touched base on that too, because I remember the first year I had the S Corp, I didn't know I had to file by March 15th, and I think I came to you on like March 13th and got them filed. So that's definitely something good to know. Now, also, what I did in my structure, guys, is one thing I did. I have a business bank account. So all business stuff is done straight out of the business account. I payroll myself to my personal account. And so that way it helps you keep organized better too, and not have to sit there and try to decipher everything to figure out, what's business, what's personal, right? Also, touch base on, like, for instance, how like I bought the car in the business name. Like, how is that stuff beneficial, I guess, to your business or whatnot, or how it all works and stuff like that?
Okay. First off, again, it's structure. If you're an S corp, the vehicle has to be in the business name, or the business has to write a check directly to you as an individual for any expenses for the vehicle for you to ever declare it off. But if it's an LLC or sole proprietorship, it can still stay in your own name. But the difference on sometimes with the business owning the vehicle, and that's again some future tax structures as things get going, you can literally have a situation in like if you're leasing your car and it's leased by the business and it's owned by the business, there are in certain situations where you can write off the entire amount of the car until the lease is up, turn around and buy the vehicle from the dealership at a lesser price, and then write off the car a second time over the course of it. Because we all know now that, the duration of a lease is normally 2 to 3 years. Vehicles last 12 to 15 years without any problems, without there being major problems. So there's different tax advantages if the business owns that car in those situations. But that's again one where we'd sit there and say, what is the one-off and what's going on there? Because I'm always reluctant on a lease on one sense that I'm a guy that puts in more miles than I ever tell the insurance company every year. Anywhere from 25 to 30,000 miles. So for me, a lease would be disastrous because I would get killed on the backside with the company. But if I was trying to when I say the company, I mean the automobile company. But if I was in a situation where I kept a separate vehicle for the business, there might be some huge advantages to having the business own the car and rent it back. And again, on something like that, I'd say that's a one-off where we have the conversation, what's right for you and what's wrong for you in the situation. And a lot of that's going to be based on your habits. But one things that you can do with the vehicles is write off a lot of the mileage. It comes in at 57.5 cents right now. The average cost of operating a vehicle is 8 cents a mile. So it's not very much at all compared to what you write off. So there's another way to help lower your tax consequences by what you're doing on your mileage. So again, that's a conversation I think we're better as each individual just reaches out to say what's right for me and put a plan around it. But there are some advantages out there.
Yes, yes. And it looks like Don, I'm going to send you John's information so you can contact him as well too, because she she looks a little stressed over here thinking she might have to amend her taxes. So she would definitely be someone that'll be a case by case basis as well too. She's got some student loans and different itemized things as well too. So I'll definitely be giving her information
Okay.
as well. Also, I think we had spoke about, because international is a little different, but obviously they need businesses. Didn't you say something to me about some? I forget what it was, and I don't know. Maybe you didn't.
I remember exactly what it was because
Okay.
earlier today when you mentioned out, I realized I was going to eat my own words on it. When you were saying that you were going down and doing some of the islands and especially Jamaica, but you were going on tour in some of the other countries and looking at, there are certain situations that as a business you may be responsible for taxes in the U.S. as well as in the Caribbean island. Now the good news is, let's take Jamaica for example. Since 1980, there's been an agreement of reciprocity between the two countries that would allow that a Jamaican citizen wouldn't be double taxed. But they still would have to file a U.S. tax return to show that it's out there. I do a lot with Europeans for the same situation where they know going into it they're not going to owe any taxes in the States, but they just have to show that for what they did, that there was a tax filing that goes with it. I can work with individuals to, I'm not going to profess to know all the ins and outs of Barbados's tax code or Jamaica's tax code or anything else, but I can take what's been done, completed, and then set up and complete the U.S. side of it so that the equivalency is filing out there, just so that everybody's on the up and up. And most of the times, it is literally somebody that's just filing the paperwork that simply says, I've already filed in my home country. Here's my contact information, whether it be the ITIN number or something else to go out there for it. So, those are, I'm glad to help out or partner with a preparer in that home country to make sure that everything's done on the both sides of the water, so to speak, to make everybody happy.
Okay. Awesome. Awesome. I'm trying to think of other questions because I know I always get questions regarding taxes, and especially this time of the year. Is there anything else you can think of that we should touch on some, or?
Well, I'm just going to echo a couple things or repeat a couple things out there. Kiwi can provide anybody my contact information. I'll be glad to work with anybody out there. I am capable of doing all 50 states. There are 6 states that I try to avoid doing too many of them, only because of complications of the states. But New York is the biggest one that I try to avoid. But New York and California, and the reason I avoid California is simply because they require me to take a 10-hour class to just do the tax return, and I'd rather find somebody than spend 10 hours looking at a computer watching the slides.
Right.
But I can work around it. It's just a matter of I usually will find somebody to partner up and say, okay, I'll do this part, you take care of the state piece. But the nice thing about the world of remote things, I'll give you an example. I just did 2 tax returns for a guy in England on Saturday morning, just by email. Boom, send it off to him, and it's there. So the world of technology allows us to do a lot with that. And I'm sorry about sliding off the camera. I didn't realize I dropped my hand. But the other part I'm going to go back to earlier is when you put in the structure and we talk about the expenses, knowing that the expenses are legitimately coming out there. You said it yourself, Keely, a minute ago about making sure that you keep your business funds separate from your personal funds and running all the expenses through the business. Even if it's one that's not a legitimate expense, that's a lot easier for me to explain to the IRS than saying, well, they paid $10,000 out of their personal account, and try to put it out there. So, make sure that you keep a separate account for everything, put it through there, and then we'll talk about what maybe needed to be paid for personally as we go along and educate. But, never beat yourself up. Some of the times we can get away with what the spirit of the law was versus the letter of the law, because the IRS agents themselves sometimes find it very confusing. So we can help out, but just making sure that you keep clean records as much as possible. Then at the end of the year, we can sit down and talk about, if you do an S corp, I can't reinforce this one enough. You have to pay yourself payroll. That's an absolute on it, that you're going to have to. And it may be simply just paying yourself $500 a month, but because their definition is that it has to be reasonable. And to be honest with you, nobody knows what the definition of reasonable really is, but it's just substance that they know that you're paying taxes as you go along. Even as a sole proprietor or an LLC, one of the things we didn't talk about is paying what they call quarterlies. That means April 15th, June 15th, September 15th. You have to kind of figure out as you're going along through the year what your profit looks like so far. And then you have to calculate what your income tax is that's owed so far and paid as you go along. If not, the IRS can assess you a penalty for waiting till the end of the year. That is something that, I can help you set up and explain, but the truth is it's simply just going down to the bank and saying, I want to pay X number of dollars to the IRS on my quarterlies. Almost every bank out there does that as a courtesy for their clients because of the number of seniors that have to do it. But I would say, even if it's only paying $100 every 3 months to them, go down, pay something towards it so that you can show the IRS that you were actually making that kind of effort towards paying your annual taxes. And then you'll pay the difference out of it later on. Or if you're fortunate enough, you'll get all that money back to begin with. But at least the IRS knows you were paying above board and declaring taxes as you were going along. But
Yes, definitely. Now, Dawn asked if there's a good place to go for a general guideline checklist about deductions for a sole proprietor. I'm sure there's probably something on the IRS website that kind of gives them like a rundown, maybe of what they can deduct or something. I don't know.
Well, I'll tell you the easiest way to do it, especially as a sole proprietor, just Google Schedule C, IRS Schedule C. And the reason I say that is they have all the major categories of expenses that a sole proprietor has on that form, whether it be advertising, whether it be legal expenses, whether it be equipment rental, office, what have you. But it has about roughly 24 different classifications. That is probably the best checklist of all, is to know whether or not anything is on a general sense, if it's tax deductible or not. Where somebody like myself comes in, we realize that there's all of the nuances that have been already addressed by the court system and the IRS, or that sometimes is still in a loophole where we can help you out. And I'll give you an example. What I say by loopholes helping somebody out is, I had one years ago personally that even the IRS couldn't figure out whether or not it would be an acceptable expense, to the tune of $50,000. I went ahead and submitted it with the idea that they may very well reject it. And thank God, 7 years later, they still hadn't rejected it. But it was one of those interesting things, because the IRS, when I tried to get a true clarification whether something was deductible or not, they couldn't tell me, because nobody had ever run into that scenario. So they were kind of waiting themselves to see what the answer would be. But the tax code, all 65,000 pages, is full of little things out there that the IRS still, with all those pages, still hasn't figured out, or that they've already ruled with the court system that that's no longer acceptable. That's where somebody like myself comes in and helps you out. But if I was just setting it up, I would just Google Schedule C, take a look at those general expenses out there, and then know that's at least a good jumping platform.
Yes. And also, I wanted to say this too, guys, is that when we're talking about an S corp and we're talking about payroll, what happens is when you pay yourself, that becomes a deduction. So let's say you just paid yourself $50,000 for the year, right? Your business paid you yourself on your Social Security. So now you get to write all that off, and then you get to write off, I believe, 50% of the payroll taxes. Am I correct, John?
That's correct.
Okay. So this money that you're deducting isn't even leaving your household. It's just that the business is paying yourself, right? So you definitely, guys, a lot of you really should be doing that already, because I know you're making some really good money, right? So you want to make sure that you are setting up payroll. John, I don't know if you do payroll. I think you were going to start doing it or not. I've been using some kind of online service because I'm only one employee, but I don't know if
I personally I'm not doing payroll, at least not yet.
okay.
But what I recommend lately is been Gusto. That seems to be the new popular one, and everybody's talking about doing well with it and being affordable. But I got to tell you, last night I got an email from Square, the credit card company, and they just set up a payroll system that looks extremely affordable to me. And using them as a merchant service for my credit cards to begin with, they're good. So it's the one that I would at least encourage people to talk to them and see how that works out. But the nice thing about payroll company, once you set it up and you explain to them who you are and what you're trying to do, most of them, all you got to do is go in, either email in or call in the hours once every week or 2 weeks, whenever you set up your payroll. They draft it out of your page or out of the business account. They pay the taxes with you from your business account, but then they turn around, cut you a paycheck, and direct deposit right into your personal account. So they handle all the fees out there. And like Keely said about the Mile IQ, it's all deductible, because that is the business is actually paying that expense, and the IRS considers that an important expense, so they let you write that off.
Yes. Oh, I know what I wanted to ask. How long should you keep your files after filing your taxes?
7 years.
Ooh, 7 years. I better give me a new box.
Yeah. Here's the rules. The IRS says that you have to be able to produce all your records back for at least 3 years. There is no indefinite time that they can audit you for if they find consistent habits that were poor habits. If somebody's consistently doing something and they find it, in 2019, and when they look at 2018, they find it, they can keep going back as long as they can pull that chain. But traditionally, they can't go more than 7 years back for audit purposes. But if they go more than 3 years, then they have to help you produce some of the records that they see as a negative on it. My personal feeling is you're better off to keep it 7 years, because like anything, they're just like the rest of us. They only have everything that's on a computer and a database out there. And really the whole secret is taxes is they already know most of what's going on as far as the income coming into the household. What we're trying to do is show them credits and expenses that it says that you shouldn't be taxed on all that. So they're not going to have all the deductions and all that you're qualified for, or expenses that you could write off if you go back 7 years. So you kind of lose the ability to be flexible on that. Whereas if you pull the file out and say, hey, listen, 7 years ago, I spent, $3,000 on automobile expenses. If you're not going to go this way, I want to be able to write that off. So I always encourage people to keep them 7 years. And honestly, most of your tax firms will keep the 7 years worth of records for you anyhow. Because anybody who comes in and sees me, one of the things they'll notice is I photocopy all the documents before I give them back. And I keep a physical hard copy of it, as well as I keep a scan copy in the computer before it's all done. So if the IRS does come in, I can grab it in New York second just from my computer. But worst case scenario is I pull the file and be able to reconstruct it and show them it was all original document numbers.
Yes. That now I will say what I love too about John compared to like going to another service or one of the big chains or whatever, guys, is that anytime I get a form from the IRS, I always text them. I'm always freaking out thinking, oh Lord, what are they doing? What do they want now? But like there was some form recently that I had and he helped me, he filled it out. All I had to do was sign it and send it in, knock on wood, I don't get audited, but if I get audited, I know I got John there to have my back as well too, where if you do it yourself or you go with an agency, they may not necessarily be there for you to help you through that process as well too. So that's something to think about as well too. And I definitely highly encourage each and every one of you to get with John and have a consultation and structure your business. Because like I said, you don't want to end up like Jackie was, you don't want to end up like I was crying thinking I had to owe them $16,000 and was going to be in debt with them forever, right? Because that is not fun when you try to when you see that number and it's not a plus and it's a negative, right? So also someone asked about, what about vacations? What's the business rule on writing them off? No vacations. Maybe she means more like business trips because they are like vacations for us. But like,
yeah, I'm gonna pretend that's exactly what I heard. That they were the business trips where you guys are getting together, doing your trainings and getting together as larger groups. Because a traditional vacation where it's just you and your family going out and having a good time, that's not you can't write that off. But if you are flying to one of your conventions, that's the word I was looking for. Whether it be in Houston, whether it be in Indianapolis, where the hell else have you gone, Keely, in the last couple of years? Wherever the case may be, that isn't entirely written off. You can write off the hotel, you can write off the flight, you can write off your meals. Everything's acceptable on that because there is actually an activity that's related to the business while on site. That's what the difference in the IRS's mind. But if it's something that, I just want to go and see Key Largo and drive down the Florida Keys, that's on my own time. The IRS doesn't care.
Right. And I mean, I know some people will tell you, and I don't know if it's correct, that like if you're on vacation and you have like a conversation or you're talking business or maybe you're sampling out, that still doesn't qualify it as a tax write-off, right?
That's correct. There's all kinds of myths on that. And at least if any client of mine wants to try to do that, they better damn well get something in writing from the other guy about how they spend a couple hours trapped in a room with you while you're trying to get it all, get them into it. It's that becomes one of those that, everybody has this idea that as long as you say the word, it's okay. That's not the case with the IRS. So, it has to be a substantial meeting of substance before they're going to allow it to be something that qualifies that. Again, like your conventions, you guys are doing a lot of activities. You're having breakout sessions, everything else. They understand that piece. But, me swinging by, having a cup of coffee while on vacation with somebody and say, hey, by the way, this TLC works great, paid my whole way. That doesn't fly with the IRS.
And see, that's why I love, there are people out there that will tell you to write that stuff off. So that's why I like that you keep it to where we're not going to be raising red flags and inviting the IRS into our house for the day, so that's definitely good because, I mean, and then that's why, I really wanted to bring you on so you could really just, give the knowledge and wisdom to people because they've been told, some have been told maybe different things from other people that'll just let you write off everything and anything, but I know I personally don't want the IRS in my house unless it's Shelly, so
Yeah, I get that. I get that. I really do.
I'm trying to see, I think I got all the questions out of here that were in here. So I think I'm good. Anything else you want to touch on, John?
No, just if anybody needs me, Keely can give you my number, but it's you can also find my website www.jberkco.com. I'm willing to talk with everybody and help out in any way I can on it, and try to make sure that everybody is in good shape. That's all. It's, the truth is, as I said from the very beginning, first time Keely came in here and told me she was going in this avenue, everybody I've ever known that's gone down multi-level marketing has hit a brick wall and they lose interest. Even like right where Keely and I both live is, I don't know how familiar everybody is with the multi-level marketing group. It works. Similar to what TLC does, but the people drop off after 6 months to a year, right, Keely?
Yeah.
Just fade out. And, it's been incredible to watch you guys all grow, and especially to watch the network grow under Keely on this. But the opportunity has been very subsidized for you guys. And the biggest thing is that they need preparers who are willing to ask questions and make sure they understand it all, because so far of all the staff or all the members of this team that I've ever helped, the biggest thing I noticed right up front is, Keely said earlier about the cost of goods sold. None of the preparers, the TLC tends to pay you guys on gross sales, meaning that you get credit for the entire amount of the sale, but they never bothered to take the cost of the products out. And that's fine, but the preparers need to know that and then manually adjust for that. And that, in a lot of cases, that's not happening. So that's why you get those shell shock moments where people think they owe a large amount of money. The difference between a good preparer and a bad preparer is a good preparer will ask a hell of a lot of questions. And then they'll also tell you sometimes when it's a good time to shut up. As I said, if somebody's got too many expenses and they're harming themselves, I might stop in and say, hey, listen, you don't need any more expenses, period. It's because somebody's not doing the right thing for that. So that's where we can help out, where I can help out. But any good preparer can. And, but the biggest thing is ask questions up front. The better teammates on this group that I've dealt with, it's like Keely said, I'll hear through them throughout the year, because they'll come up and say, this has come up. What's your thoughts? Am I okay doing this? How do I do this for them? What have you? So if nothing else, I have the confidence that they're actually doing the things as well at the end of the year. But it's also can guide them and say, okay, things are starting to shift here. Maybe it's time for us to reassess what's going on.
Yes. Can you repeat that website? I typed your number in the chat, but I don't have your website. What is it again?
Okay. www.jberkco.com.
Okay. So guys, I went ahead and I put in his phone number. I put in his website in the chat. I'll also send it in the team chat as well too. You can also message me so I can send it to you. And also John Nikki just commented and said thank you. So
thank you, Nikki.
Yes. So but yeah, guys, listen, I definitely highly recommend getting with John. Get your business set up for success. I hope you guys found this valuable. I definitely want to thank you, John, for taking the time and getting on here. I appreciate you to the moon and back, because you have definitely saved my butt, and I know will continue to guide me with my business in the right way. So everyone is just going off saying thank you, thank you, thank you, thank you. So we are.
Thank you, everybody.
Yes, we are super thankful and grateful for you for getting on here. So I apologize ahead of time if your phone starts blowing up. But I look forward to hearing that you're able to help others as well too, and really get them going in the right path. So I appreciate you, John. And guys, also, just so you know, I raffle off stuff every single week. It's a tax write-off. I love it, right? Listen, if I don't raffle and spend money in my business, I'm going to be giving it to the IRS at the end anyways, okay? So guys, listen, I'm going to be giving away 10 samples today for the raffle for those that were on the training till the end. Okay, so it's going to be 5 Instant Tea samples and 5 NRG samples. We will be back here next week. Dean is actually going to be on training So he will be on here next week to give you some awesome and amazing information. This is recorded, so I will upload this to YouTube and get it over to you guys as well too. Again, John, I just want to thank you so much for jumping on here, and I know I'll be talking to y'all very soon. So guys, you have an awesome and amazing evening, and I'll talk to y'all later. Bye-bye.